An overnight global sell-off has sent investors worldwide into a tizzy. So who's to blame? Well, to hear talk on Wall Street, Fed Chairman Ben Bernanke and the Fed Open Market Committee. Here's the chairman's words to Congress.
I mean, inflation is 1%. Unemployment is still high. So we could tighten monetary policy and address some of the issues that you have in mind. I think it would also include a big market correction.
From his mouth to the ears and pocketbooks of investors everywhere. Overnight, even the mention of possibly ending quantitative easing in the FOMC minutes, which is what many in Congress want, was enough to cause a bit of a panic. Take a look at the sell-off across Asia. China and Korea off 1%, Hong Kong off 2%, Japan off nearly 7% in overnight trading. Which, depending on who you talk to, is exactly the point. QE opponents say it's become like crack to a cocaine addict. QE supporters say this proves the economy isn't strong enough to go it alone. Still, a Wall Street Journal analyst says Bernanke's ambivalence seemed to stoke the QE fears on both sides.
And everybody knows it can't go on forever, and nobody wants to be caught short if the party's going to start to end. Yesterday was a disaster in Fed communication.
Or was it? Some veteran Fed watchers say this was no mistake. The Washington Post wonk book says Bernanke keeps showing up for his congressional beatdown with his gloves on and his jaw jacking. Our deficits aren't dropping because we're doing something right. They're dropping because we're doing everything wrong. We're cutting deficits much too quickly in the next few years. That's what Bernanke's testimony is about. Well, that's one view. Another is that Bernanke was carefully launching a test balloon on QE, suggesting the economy is getting strong enough to stand on its own to see how the markets react.
Look at how the markets are reacting without the Fed doing anything. You know, if you ever wonder what would happen if the Fed actually tapered, take a look at this as a small sample of what might happen. Do you think this is what the Fed wants to happen?
For now, the Fed continues to buy $85 billion in bonds each month, keeping interest rates low for big consumer purchases like homes and cars and spurring the somewhat sluggish recovery. The Fed and the FOMC meet next, June 18th. I'm Jim Flink for Newsy. Multiple sources, a broader view.